Okay, I think we've got a good group, and then this will be recorded as a hot topic briefing where we at the Emerging Payments Association Asia. I'm Anthony, who's going to be listening to and asking questions of, along with your good selves, our two experts for today on central bank digital currencies. For those of you that perhaps don't know the Emerging Payment Association, we're a member organization for payment professionals across all walks of the payment flow, with an overall mission of sharing experience, dealing with regulators, lobbying where we can, and representing the industry in various sometimes global initiatives, certainly representing the Asian end of the Emerging Payments Association in global initiatives. And yeah, and ultimately, I think we all spend our days trying to make life easier for the users of payments, which is pretty much everybody. So yeah, welcome. And yeah, delighted today to have Tony Richards from Digital Finance CRC and Sonia Davidovich from the BIS Innovation Hub in Singapore, two deeply experienced professionals in this space, who are going to hopefully guide us through the wonderful world of central bank digital currencies, where they are now and what's coming in the future. But perhaps to start with, maybe Sonia, tell us a little bit about your journey here, how you've ended up at the BIS Innovation Hub, and why is the BIS Innovation Hub focusing on central bank digital currencies?
Thank you very much, Anthony, for this introduction. A pleasure to be here today with all of you and to engage in a discussion, and hopefully I will get some time to answer questions from the audience. So I'm Sonia Davidovich. I'm with the BIS Innovation Hub Singapore Center. Here in Singapore, I'm the center's digital assets / CBDC lead, and I'm officially a secondee from the Monetary Authority of Singapore. All the while, I'm on leave from the International Monetary Fund, where I've spent almost 12 years in various roles. The most recent role I held at the IMF was the digital expert on emerging technologies. As part of that, provided technical assistance to IMF member countries on CBDC. I had a short stint at the European Central Bank on a digital euro project before coming here a little over a year ago to Singapore. So the BIS Innovation Hub, for those of you who do not know, is the mandate of the Innovation Hub that were established about 4 years ago is to identify critical trends in financial technology that are of relevance for the central bank community. And to build, based on those insights, build public goods that would benefit society and the economy at large, and also to serve as a focal point for a network of central bank experts on innovation and relevant topics. We have various thematic areas that we're engaged in across the 6 innovation hubs we have worldwide. Supervisory and regulatory technology, next generation financial market infrastructures, CBDC, open finance, cybersecurity, and green finance. So it's not all about CBDC, but CBDCs are the biggest chunk of our work program. I would say around 60% of our work program is taken up by CBDC. And the reason for that is that our members, BIS members, the majority of them are engaged in some form of CBDC exploration, be it on the retail or wholesale side of things in a more explorative fashion, or even now with like live pilots or CBDCs in production. The needs for CBDC expertise and knowledge around that topic is very high. I think about the latest BIS survey that we run every year has about 93% of the surveyed central banks do some work in the CBDC area. So this is a very strong indicator, and for us, a signal that we have to engage in CBDC work more so than on the other topics. But certainly the other topics are relevant as well, and we are exploring them together with our colleagues in the other innovation hubs, as much as there's interest from others. AI, for example, generative AI is another topic that is increasingly becoming more popular. So we try to support as much as we can on those topics that are relevant to our members.
Wonderful. Yeah, that's an amazing amazing depth of experience around the world as well, and obviously now based here. Tony, I think you have a wonderful depth of experience as well. So perhaps how did you end up in the world of CBDCs, and love to hear it, because you've got a background in the Reserve Bank in Australia, so it'd be great to get your perspectives as well.
Right. Thanks, Anthony. Well, I spent 20 years at the Reserve Bank of Australia, where I spent the first 10 years on the monetary policy side, leading the economic research and economic analysis departments. And then the last 10 years I spent in the payments policy department. And the Reserve Bank has actually got a specialized payment system board, as well as a general sort of board for running the bank and making the monetary policy decision. So payments is a very important thing, a very important mandate for the Reserve Bank, because it's got quite strong regulatory powers in the retail payments area, and it's also got a responsibility for supervisory oversight of financial market infrastructures in Australia. So I was there for 10 years, and I was on the payment side between 2012 and 2021. And in 2013, I think we first became aware of this thing called Bitcoin, and we all had to learn about it. And I actually bought a small amount of Bitcoin to try to better understand it in 2014. And
but not enough to retire, though. Not enough to retire.
The talk had definitely moved to central bank digital currencies by about 2017, and we were doing a lot of work at the Reserve Bank thinking about the pros and cons of central bank digital currencies. And at the time, the Reserve Bank's view was that it was probably easier to see a case for retail CBDCs. We'll define the topics a bit more later on. It's probably easier to think of a case for wholesale CBDCs than for retail CBDCs, but the Reserve Bank kept an open mind and has continued to do so. So I left the Reserve Bank at the end of 2021, and I'm now affiliated with the Digital Finance Cooperative Research Centre. Cooperative Research Centres, or CRCs in Australia, are public-private consortia, a public-private/academic consortia, and the Digital Finance CRC, the focus is on the sort of the possible next major shift in finance, which is a shift towards tokenized financial assets and tokenized technologies. And in that context, if people are going to be trading tokenized bonds or tokenized equities or tokenized new asset classes like carbon credits or something like that, they're going to need a safe settlement asset. So a logical question is CBDC, could it have a role as that safe settlement asset? So the Digital Finance CRC has got a very strong interest in central bank digital currencies as a potential future role of a potential part of the future financial system. And in 2022 and 23, the Digital Finance CRC did a pilot program with the RBA, where the RBA actually issued some real money CBDC, and we got to see how the private sector could use it. We trialed 15 or 16 use cases, and there were some fascinating use cases, and there were some great learnings out of that. Australia hasn't just taken the decision to issue a central bank digital currency yet. They'll continue to study it, but there were some learnings that there are potential strong use cases, I'd say, especially for wholesale CBDC, but we can talk more about those in a little while.
Wonderful. No, thanks, Tony. That's fantastic. And I know, Sonia's running pilots as well, which we'll also hear about. So maybe let's start what should be the easiest thing, but as we were chatting, maybe it isn't. So what is I think we understand the first bits of CBDC. So we know what central banks are. That's pretty clear. And they, actually from both your perspectives, be interesting to think about talk about what their responsibilities are. You mentioned some of them, Tony. But what's this digital currency at the side, and what sort of falls into this bucket? And maybe we'll start with you, Tony, given you're sort of been on the monetary side and the payment side. So how would you best phrase a central bank digital currency? And then obviously we can get into the types later.
Sorry. Well, let's focus on the last word first, currency.
Yes, good.
I'd say that we're talking a new representation of our existing currencies. So it's a new form of Sing dollars, Australian dollars, euros, US dollars, rather than, so we're not talking Bitcoin here. We're talking an evolution of our existing forms of money, or of our existing money, a sovereign or fiat money. And then central bank, it's a liability. It would be a liability of the central bank, so it wouldn't be a commercial bank liability. Most money these days is a commercial bank liability. So in most of our economies, bank deposits are something like 95% of the standard measures of money supply, and those the commercial bank deposits meet many people's needs, but the CBDC would be a liability of the central bank in the same way that cash is a liability of the central bank, or banknotes are, and in the same way that reserve balances or settlement balances are a liability of the central bank. And then the final word is digital. It'll clearly be a digital claim as opposed to a physical claim like a banknote. So a central bank digital currency could either be, we talk about retail CBDC and we talk about wholesale CBDC. So a retail CBDC would be like an electronic form of a banknote, and it might be blockchain based. It might well not be. It might be based on more conventional technologies. And countries, many of the industrial countries seem to be looking at CBDCs that would not be blockchain based. And they are envisaging as assets that households would hold for payments. So the ECB is talking about CBDCs as being something that households would be able to use for everyday payments, and households would be able to hold a certain amount, but businesses wouldn't. So that's an interesting issue. And then you've got wholesale CBDCs, which you can think of as a new form of reserve balances or settlement balances, with new functionality associated with it. And most central banks are thinking, I think, that wholesale CBDCs, if they were to be introduced, would most likely be tokenized. They'd rely on distributed ledger technology. So they would presumably be a new form of reserve balances that could be held by commercial banks and others that already hold reserve balances at the central bank. But there would be they would be able to be used in new ways relative to what the existing reserve balances are a pretty unsophisticated financial instrument, and potentially a tokenized claim on the central bank, or on a tokenized reserve claim, could offer much greater functionality. Then there's the final question: who would be able to hold CBDCs? So wholesale CBDCs. At the very least, they would presumably be held by those entities that currently have access to central bank balance sheets, that currently have reserve accounts at the central bank, and potentially you could look at broadening access, but that would be a policy decision by central banks. So I'll stop there, Anthony.
Great. No, many thanks, Tony. And yeah, lots in there from, and obviously different views around the world as to what this might be. I mean, maybe Sonia, does that sort of fit with how you're looking at it? And maybe, given your background, maybe we can unpack some of these words just so they're such as tokenization and and just why are we at a point where a new form of representation of sovereign money is appearing? What's the point? Why? What triggered this?
I think Tony gave a very good overview of what types of CBDCs exist and what are the commonly agreed definitions. Although, of course, it's important to always say what it's not, because I think CBDC often gets confused with other forms of money. So maybe just a few words on that. CBDC is solely issued by the central bank. So there are situations where a Ministry of Finance or another government body will decide to issue a token, but that is not considered a CBDC. That has been the case, especially in jurisdictions that do not have a monetary authority or a central bank. So Ministry of Finance that will issue a token, but again, that wouldn't be considered a CBDC. So that it's just important to be aware of that distinction, because just because it's a government agency or government or a ministry doesn't mean that it's the issuer of that coin. It doesn't mean that it's by definition a CBDC. Truly, it has to be issued by the central bank to be considered a CBDC. And then obviously all other forms of private money that are issued are also not CBDCs. Stable coins, tokenized deposits, and such, cryptocurrency, altcoins, those are all privately issued forms of money. And I think that the last bit, or these privately issued forms of money, are a huge impetus or a huge motivation for central banks to explore issuing a digital form of public money, because you will remember a couple of years ago, Facebook, now DM, has decided to explore issuing a stable coin at that time called Libra. And that was a huge motivation or a driver for central banks to get serious about working on central bank digital currency. And one of the main reasons why institutions like the BIS decided to establish innovation hubs, just so central banks can get up to speed on technologies that matter for central banks, including digital technology, DLT, digital distributed ledger technologies, and digital assets in general, and to through that capacity building, that knowledge sharing, enable central banks to build their own or issue their own digital currency at some point in time. I believe Tony mentioned something that is critical in the whole discussion around motivations for issuing CBDC. In the Web3 economy, we see like tokenization of real world assets and the tokenization of financial instruments in general. We need some sort of reference value, a monetary anchor. A lot of times it's referred to as monetary anchor, and what that is just a way for the consumer to know the exact value of one token against another, and to preserve this concept of singleness of money, so that at all times I know as the end consumer how much my token is worth. And it's very difficult to establish in a world where real world value is tokenized, like think about non-fungible tokens, NFTs, that are increasingly being exchanged in a Web3 economy. Right now, there is no accurate way of like establishing what true value is compared to the analog world of that specific token. Stable coins and like a link to the real world, meaning how do you on or off ramp fiat currency from the analog world into this Web3 economy environment. Right now, that role is played by stable coins, but oftentimes stable coins have the aspiration of being or having a stable value against a fiat, underlying fiat currency, a currency that they're pegged to. But oftentimes that is not always the case, and it takes a lot of effort to safeguard and preserve that value. There's a lot of audits are needed, and openness and transparency around the bookkeeping and the value of the collateral that these stablecoins are backed by. So I think the BIS view is that that role is better played by a central bank digital currency. So I think in general, like whether a lot of times you will hear the argument, well, there's not really a real problem for CBDC to solve, and it's a solution search or a problem. But I do think that for the Web3 economy, it really doesn't matter whether there's an actual real world problem. And if adoption is low, the public sector and central banks need to remain competitive, need to be able to conduct monetary policy, and a CBDC could be exactly that tool to do so, in addition to preserving the singleness of money concept and providing a stable and a safe reference value to the economy at large. Now, that is different for emerging economies and developing countries. They have a much stronger use case for retail CBDC, for example, than it is the case for jurisdictions like Singapore or Australia that have a very well-functioning and highly developed financial market. In those economies, it may not be as profitable, or it may not be commercially viable to serve segments of the population, for example, that are live in remote areas that don't have access to ATMs or bank branches, or where it's not profitable for banks to bank those segments of the population. So in that instance, the central bank can step in and provide sort of like stopgap that if you will, a market gap, and provide the entire population with a viable payment instrument and some form access to finance, to ensure that financial inclusion as a policy objective, for example, is fully achieved. Now that will be different for every country, and it's extremely important to keep in mind that design decisions around CBDC and the choice for a specific CBDC, be it retail and wholesale, will very much depend on the country-specific circumstance and the policy objectives that a central bank has to achieve, as a general mandate, so to speak, for their economy.
Yeah, no, I think absolutely, and yeah, good to see you mentioning what actually, frankly, I think scared a lot of central bankers and politicians around the world, which was the prospect of a Zuckerberg coin, which he called Libra, and invited lots of people in. But the economic power that would have provided, and the bypassing of current special nature that a currency in a country has, and the central bank's role, I think in lots of ways, I mean, funnily enough, the technology wasn't well suited, interestingly, but actually I think it was just the monetary impact that could have had. So that was good to reference that, and I think very good to flag. Obviously we'll come on to more the wholesale side, but there is something special about money, that it actually enables people to frankly, it enables them to be rewarded for economic activity. So when we're getting to, as you mentioned, economies that don't have the existing, and frankly, very expensive infrastructure for cash distribution, and there are opportunities to earn a living and get rewarded for economic activity digitally, there is this choice about, do we let private entities manage all that, and they have other interests? Because ultimately people will pay for it, either pay for the pay fees, or they'll pay with their data, one or the other. So there is this role, and I think probably we can best see that the biggest example of that in the mainland, when effectively the central bank in the mainland of China has said, we actually believe there is a role, I mean, they're still in pilot, but pretty big one. There is a role for us to ensure, independent of two private entities, that everybody has the ability to conduct economic activity with something they can trust. And then it's a policy decision, as like you said, whether to charge for that or not, because it's actually, they believe it is part of the economy. So I think that retail side is very interesting. Maybe back to Tony, and you mentioned, and maybe we'll sort of cover retail first and then move on to the more complexities of wholesale. But as you mentioned, Tony, it sounded like in developed markets, or I mean, ironically, I actually regard the mainland as more digitally developed now. So I'm not sure it's the right word, but in markets which are well provided with existing retail payment systems. Perhaps, you did a lot of use cases. I imagine some of those were in the retail space. Maybe you can share some of your learnings and observations from the well-serviced markets, the Singapores, the Australias, the Hong Kongs, the US, the Europe, as to what the world looks like for retail there and the prospects.
Sure. Well, I suppose at one end you've got the US, where there are a lot of people that are not yet convinced that there's a case for retail CBDC, and there's a political element, I'd have to say, and you've had a Fed governor using the term solution in search of a problem. So they obviously have a lot of trust in the market to provide payment services. Some other economies have probably got less trust in, and the euro area, for example, obviously haven't taken a decision to issue yet, but they look like they're heading in that direction. And I think their rationales are they want to promote the single market for the euro. They are, I think, somewhat uncomfortable with the role of large private payment schemes, often foreign schemes, and large technology companies in providing payments, and they would like to ensure that households continue to have access to, I guess, to public money and not be dependent on private money. Then you've got some markets where I think resilience is a bigger issue, and that's the case, I think, for the euro area. It's probably the case for Sweden. I think they've talked about resilience, and that's the idea that we're all becoming very dependent upon the banks for providing payment services. And if a CBDC used a different technology, it might be more resilient in the case of outages that could occur for whatever reason, including due to geopolitical issues. So
or even more mundane, I think, just to interject, Sonia, I think you'll have experienced one of the dominant PayLah, one of the dominant payment methods in Singapore had an outage, and that has a big impact.
Yes. So I think resilience is something that central banks, a lot of industrial leading high income central banks will be thinking about, and a sort of related one is that, as Sonia touched, there may be some segments of the community that are not well served by existing payment services. In some cases, it's just due to distance that large countries like Australia have got parts of the country are not well served by electronic payments and by internet coverage. So that could be a use case for central bank digital currency, and the particular one that I think Sonia's already alluded to is offline payments, and that was one of the use cases that we saw in our study, in our pilot. That one of the use cases, for example, involved the use of CBDC as a P2P and P2B payment mechanism in an offline context at a couple of universities. And one of the universities was located in an area that had bad floods a couple of years ago, and the electronic payment systems had gone down there. So I think they were particularly keen to be involved in a trial of how offline payments could work. So I think offline would be it would be hard to imagine a high income economy introducing a retail CBDC without having offline payments, because it's an obvious use case, and the private sector is showing no sign of filling that niche. So maybe there could be a role for the central bank there. So
and maybe just to unpack that one, to bring it to life, because I think we all know what online digital payments look like, because we'll all use them. But maybe just to unpack that, because the common theme for this it's a theme already, but it wasn't necessary in the electronic payments. But cryptographic protection is necessary, and that requires infrastructure either online or I'm assuming these were chip cards with chips on them to provide that cryptographic capability to do the offline. But maybe you came up with something else.
it was a actually, I'd have to check whether it was whether it was a physical card or whether it was a mobile phone based one. But
well,
you can do it either way. Yeah.
Yeah, because inside the mobile phone,
yeah,
you've got the
secure element.
kit. Yeah, the secure element. Right. So yeah, it could be either.
So, and there's a lot of work going on. The biz has done some work on offline payments, and there
of course
there are still some issues to be resolved.
And actually, in the way, the phones have got the phone-to-phone connectivity anyway, so you don't, provided you could charge your phone up, you don't need the network. You just need the two phones. You know, they've got multiple forms actually. So that would make sense. Sonia, you were about to add. Is that something that you've seen?
I think Tony is absolutely right. Offline plays a big role for retail because you know, the status quo now with cash, like we don't need any connectivity whatsoever. Mind you, we need connectivity. I mean, the ATM needs to be online to be able to disperse cash. So, but other than that, like cash is like fully offline at all times. So it's extremely difficult for a retail CBDC to match that capability of cash. So I think that offline is still a nascent area for CBDC, for retail CBDC, but it matters for a lot of jurisdictions, including digital euro. Offline's been a big theme there, and you wouldn't think that in the EU it would matter as much, but truly, even in the EU, there are parts of the population that are off the grid or almost off the grid, like in Lapland, like northern parts of Europe, or other remote locations where connectivity is just not ensured. But the form factor that you alluded to, meaning is it a card or a phone or a watch or whatever form, is like is an interesting way to think about it. Like most people think just about phones, but a lot of times like we'll see cards or other devices that have like a chip with secure enclave on them that can be used for merchant payments, but can also be used for peer-to-peer payments. We can hold two cards against one another to pay your friend or your family for whatever purpose. And the only one concern about offline is that there is a need to go online at some point. So then when you're onboarding a customer, they need to be online. And then plus every once in a while, after however many transactions, consecutive transactions or amounts, you have to go online to sync with the main ledger for various reasons. One is that for security reasons, right? Like there might be a bug or a system flaw that has to be remedied or
absolutely
fixed. Yeah, and you have to be online to be able to patch to download that patch to your device or your form factor, whatever it is that you're using. And then also like you need to ensure that there's no like that you're for double spend purposes, like you need to sync with the main ledger so often, and it creates a lot of problems. Because imagine when you're like offline for however long of a time, and you have had so many transactions, there's a large amount of data that gets downloaded in that moment. So it creates a huge bottleneck when you're going online. It might take like a lot of time for that data to be downloaded and processed. So it's not as straightforward of a
actually really isn't. No, yeah, absolutely. No, Sonia, funny enough, my career started with offline eCash, and then I went into another offline version, which was for mass transit Octopus in Hong Kong. And these are super non-trivial problems, because you're right, how long can you leave it, amount, frequency, how can you get the transactions flowing? And sometimes how can you, we had to manage gaps. There may be transactions that never get back to you, but you still, and we were doing things like sending multiple transactions and then reassembling the ledger. So it's a very specialist area actually, but
it's quite difficult. It's not standard. There's no real standard for offline CBDC, and so it's one area that needs a lot more work I think Tony mentioned the one project at the BIS that looked at that is Project Polaris. It's basically a handbook for offline CBDC.
Very
And you
interesting.
know, whoever's interested in that topic can read up about it. I can also post it in the chat. It's still an area that warrants a lot more attention and work. So we're nowhere near
Yeah.
done, especially if we want to compete with something as like cash.
Yeah. So I think you're absolutely right, trying to mimic those properties of cash. And then obviously, you know, and then we get into the anonymity level that's appropriate or not. And there's a whole debate, but it's been very interesting to see. I think New Zealand was a good example where this is front and center. You know, they won't do it without this ability, as you know, as Tony referenced Europe as well. Whereas there may be other places that are much less worried about this. So I think that's a great sense on the, you know, on the retail side. Maybe just before we move to wholesale. Any other thoughts on that? Or are you happy to move to wholesale? Because I think we'll need to start off wholesale just by unpacking this word tokenization and what are we really talking about, and why is this? Why was Bitcoin? Why did it have this big ripple? What's special about this technology, which I think is best described as an append-only database, because you can only append this, you can't modify it. So maybe Tony, let's just unpack why this is, and Sonia referenced Web3. What's special about what's coming out here, and therefore why is this prompting the central banks to look at it?
Right. I can have a go at that. You're right. There were a few novel things about Bitcoin. One of them was the nature of the database, as you say, the append only, and the shared nature of the database, that everyone could have the database. Another aspect was that you could have an asset that wasn't backed by anyone, an asset with no issuer. And that's something we're not talking about here with CBDC. It's very clear that there is an issuer here. But I think it's the blockchain, it's the distributed ledger that's the interesting aspect of Bitcoin that has flowed through into CBDC.
And linking to that, Bitcoin doesn't work banking hours. So I think that, you know, it's just continuously working, and that's a huge challenge to the existing payment systems. I mean, you've been heavily involved in that. Yeah.
But we've shown that the existing payment systems can move to 24/7, 365. Like our fast payment systems are always up. And for example, at the RBA, we've shown that you can do settlement. You can do real-time gross settlement of every single transaction. Every single $3 coffee potentially can be settled in real time, even at 4 p.m. on a Sunday afternoon or 4 a.m. on a Sunday morning.
Yeah.
So,
and I think that's a really important point as we sort of wrap up retail, that the faster payment systems have actually had quite a big impact in the need, certainly in the markets that have good infrastructure. Is that fair to say?
Absolutely. That there are markets like Australia are saying that, you know, we've got a well-functioning payment system, including an always-on instant payment system. The case for CBDC is weaker there. And then there's the other issue of potentially CBDCs, wholesale CBDCs probably, could be used to facilitate cross-border payments. We'll probably get onto that shortly. But on the other hand, we've already got instant payment systems, and it's possible that linking instant payment systems, fast payment systems, is a much quicker way to improve cross-border payments than introducing wholesale CBDCs, which don't yet exist. And possibly Sonia will want to talk about Project Nexus, which is a real-life use case of how you can link fast payment systems to enable real-time cross-border cheaper, faster, more inclusive, et cetera, cross-border payments.
So
yeah,
great.
I think that's
go ahead, Sonia.
Yeah, I think that's a very valid point, and I don't think that in the short term and medium term it's absolutely necessary to have a CBDC. I mean, a lot of countries have well-functioning instant payment systems, and they say like we're we're good with what we have now for the time being, and we don't need to introduce a retail CBDC at this moment. And I think that we will get to a point where not just the interlinking of IPS among each other will be possible, but also where we're looking at integration of IPS with CBDC systems when they develop later down the line. But for example, Tony mentioned Project Nexus, and it's a great example of how you interlink existing legacy systems without the need to have a CBDC in place. But we're certainly, and it's been quite a successful project in that it's one of the first BIS projects that's close to graduating into production, where it's actually going to be going live in the short to medium term with the parties that are interested in Nexus. And there's been interest from other countries outside of the region that want to interlink with the regional IPS here. But of course, we have to think more strategically, and we have to be forward-looking and explore ways of how we can improve Nexus even further, because it still relies on the correspondent banking network for the foreign exchange. And, we have to also think about regulatory and policy compliance. So we are looking at all of these areas within the BIS Innovation Hub. For example, Project Mariana is exploring foreign exchange trading and settlement using AMM as a concept from the decentralized finance world. And possibly there will be ways to kind of bring it all together so that we can improve what already exists and apply novel solutions to projects like Nexus to make it, to future-proof it, and to make it even more efficient in the future. But certainly, as CBDCs, again, to my earlier point, they will have to, in some shape or form, exist in the Web3 economy. I don't think there's a way around it. So even though we have solutions like Nexus for the time being that can serve the cross-border payments use case very well, we still have to equip central banks with the knowledge and the capabilities to build out a CBDC at some point in the future, because I just don't think, especially given the tokenization trends that we're seeing, and Tony mentioned that in his intervention earlier, I just don't think that we will have a way around it. Maybe we'll have a way around retail CBDC, but wholesale CBDC is just one safe settlement asset that lends itself really well for all sorts of use cases, not just in the cross-border payment space, but also delivery versus payment use cases. I think Tony mentioned a few of them.
Yeah, and I think maybe that's a really good one. And maybe I'll just take a personal example of the most terrifying transaction I've ever done, which was buying a house. And it is heart-stopping when the money disappears, especially because I was buying one in the UK and I'm in Hong Kong, and the money literally disappears for a period because it's in the correspondent banking system, as you referenced. So, Tony, maybe you can, and obviously that's trying to move that's actually moving a register in the UK of ownership. And then, so maybe you can talk about if that was actually tokenized, which is this sort of unique ability to add it to an append-only database. Maybe you can talk about that, and then the magic almost of actually not having this gap between the transaction and the settlement. Maybe you can talk about that, because I think that probably is the area both of you have flagged that wholesale CBDCs could be very useful for.
Sure. Well, I talked about Bitcoin, how we learned something from Bitcoin. It was introduced at the start of 2009, I think. And then along comes Ethereum around the middle of the last decade, and its smart contract functionality, and that's the thing that helps to enable what's called atomic settlement. So this is the idea that settlement on one ledger, transfer on one ledger doesn't occur unless transfer on the other ledger occurs, so that the asset doesn't move unless the
So in this case,
the
the
payment
house,
moves.
yeah, I won't pay until they're simultaneous transactions. They're
Yep.
atomic. They can't end up in a middle. And I guess the reason this is key is if a correspondent bank collapses in the middle, you've lost your money to a legal process. So
Yeah, well, I think we've done pretty well at basically almost eliminating the risks of your case.
good, thank you.
But it's still a clunky process.
Yes.
And it can be a lot smoother potentially with atomic settlement of where you've got the asset on chain and you've got the settlement asset on chain as well. And there are issues with interoperability between different chains, which are a challenge. Which I think there are still challenges that need to be met. But our pilot, where the Reserve Bank issued some real money CBDC, most of the use cases were for, I'd say, either transactions in financial and other assets, or they were orchestrating complex payments. And so CBDC could help with the settlement asset in transactions involving tokenized existing asset classes. For example, high quality liquid assets, one of our use cases was, or potentially in new asset classes. There were a couple of use cases that involved nature-based assets. And then the other one was that the other broad, the category that we had a number of was using the smart contract functionality of tokenized assets to ensure that multi-party payments, that orchestrated payments, where you had a number of payments that had to all occur, or not occur, and smart contracts and CBDC backing that was one of the use cases that that the participants really valued. So I suppose the other finding from our program was that CBDC could help promote private digital money innovation. So it could help promote the interoperability and the uniformity of tokenized bank deposits or stablecoins, and that was something that Sonia pointed to earlier on. That it can it can help ensure that it can reduce risk when you've got stable coins of different issuers or tokenized bank deposits of different issuers, and CBDC can be the settlement asset behind them. So, I think our project showed a number of use cases where a tokenized form of central bank money could provide real benefits. It wasn't a full study of the costs and benefits of a CBDC, but it did show that there was definitely some use cases that the private sector would be able to pick up and run with.
Excellent. And Sonia, is that similar to what you're seeing, that the wholesale side will provide clear benefits, both, obviously in the economic side, and then perhaps, you can talk a little bit about those systemic risks. Obviously, BIS is very interested in the systemic risks and which bits it addresses, which bits it doesn't address.
Yeah, so cross-border is what I live and breathe every day of my life at the moment. And so we see a lot of potential there for wholesale CBDC because, for example, one example is Project Mariana, where we use wholesale CBDC for the trading and settlement of foreign exchange transactions. And settlement risk is like a huge cost factor. It's the biggest chunk of the price in an FX transaction. So through the introduction of a safe settlement asset, we will be able to eliminate settlement risk, which should drive down the cost of FX transactions. So that's something that is extremely beneficial in the context of foreign exchange, to have this safe settlement asset.
And putting that in context, effectively, the risk of the counterparty disappears because the counterparty is the central bank.
Exactly, and then you eliminate counterparty because the counterparty is actually, in this particular instance, it's like the the AMM, which is nothing but a smart contract. So your counterparty risk is also eliminated effectively. So there's a lot of potential there that wholesale CBDC can introduce. And then on the issue of interoperability, we've been able to develop a standard like for wholesale CBDC that will allow us to move this token across the architecture. And I think that is also like one contribution that we can make through the introduction of wholesale CBDC, because they're all based on a uniform technical standard. And then no matter which CBDC it is, if it has a standard that underlies it, it can be one way to enable interoperability across the architecture, across different networks, across different platforms. So I think that's something that wholesale CBDC can also introduce. And then certainly when it comes to like the benefits of DLT that Tony alluded to earlier, we also see a lot of potential in like enabling conditionality or programmability. So for example, in the cross-border payments context, we can, this project I'm working on currently, Project Mandala, is exploring how conditions that are basically input at the transaction input stage, like amount, jurisdiction, and so on, they will trigger a specific set of conditions that will then sort of impose what regulatory measures or policy measures the transaction needs to comply with to be able to release the money. So condition for the asset transfer stage, so to speak. So these are all use cases or capabilities that we can enable through DLT or other technological solutions as well, like multi-party computation.
That's super interesting, because effectively you're taking a lot of the regulatory burden, the sort of policy regulatory burden, and actually putting it, enabling it through programming right at the point where the money is where the money is.
Yeah, even before in the pre-validation stage. And we're exactly. And the other interesting piece to that, other than this pre-validation stage, is also the ability to, once compliance checks have been completed, for example, there could be like a compliance proof, and that proof can then be wrapped around the settlement asset and travel with it across the payments chain all the way to the recipient bank. And that's also a capability that could be where we could lean on smart contracts, zero knowledge proofs, for example, that could be enable this policy wrapper. This is a concept where we leaned on the purpose-based money solution that the MAS has introduced in their Project Orchid, and that's something that we want to expand in the cross-border context as well, because PPM was more from had more of a domestic focus, but here with this project Mandala, we're able to expand that into the cross-border dimension, which is kind of interesting because there's a plethora of use cases that can be unlocked just through this programmability feature.
Yeah, and particularly you mentioned the cost of travel, because the travel rule is a particularly problematic area, and if the information can be cryptographically protected but then challenged, that's your zero knowledge bear. That does open things up. I'm aware that we've covered an awful lot, so maybe, but I'm aware we're already out of time, sadly. So maybe just Tony, sort of some closing thoughts. Are there bits that we've not discussed that you'd like to highlight?
I think one of the focus of central banks that you're going to on wholesale you're going to see is, are there other ways that, or what are the different options for facilitating safe settlement in tokenized assets? And so that you've got the ECB's got to work, or the Euro area's got a work program underway of, could you do it with, let's say, minor modifications to existing RTGS systems, that you could have could you facilitate settlement of tokenized assets without actually having tokenized central bank money?
Yep.
Or alternatively, what are the different types of tokenized central bank money that you could provide to facilitate the settlement of tokenized assets? So there's a fair bit of work going on in that area. At the ECB, the Swiss National Bank is doing it. The Reserve Bank of Australia is talking about it, and no doubt some other ones. So I think that's a key thing is that you will see central banks putting a lot of focus on wholesale CBDC and the possible alternatives to it. And I'd say the other point I'd make is that I think everyone is closely watching what the euro area is doing on retail CBDC, because it's handy to have someone that's at the forefront, and we're all going to be very interested to see what's feasible and what's difficult there.
Wonderful. Thanks, Tony. I mean, wonderful sharings, and yes, and obviously a continuingly fascinating area. Maybe Sonia, any points you think we've missed, and as we close?
It's closely related to Tony's point. I'm most excited about the shared ledger options that explored as part of the regulated liability network and the unified programmable ledger that the BIS General Manager Carson mentioned in his annual economic review, Chapter 3. This is the integration of commercial bank and central bank money, because I do think that CBDC projects in general are very complex. It does sound all of it when you talk about it and very easy, but in fact it's not. It's highly complex. So I do think that central banks will increasingly focus maybe on the wholesale settlement side of things and let the retail facing applications be taken up by commercial banks through tokenized deposits. I think Bank of Korea's actually CBDC program is exploring exactly that, because on its own CBDCs are just extremely complex. Having been on the inside of a CBDC project on the digital euro team, it's certainly not an easy undertaking. So I think that we will see a lot more hybrid arrangements and synergies in terms of shared ledgers or shared networks that will emerge.
Oh, wonderful. No, thanks a lot, Sonia. Amazing sharings, and just as you reflected on, or all reflected on the retail side, there's technical challenges and policy challenges to overcome. Likewise, wholesale. So I think I wouldn't be surprised if we'll be back here with another hot topic in a year's time, and things will be progressing, hopefully. So first, like to thank you both. Wonderful sharings and very much appreciated. And I hope participants and those that listen and watch this afterwards, certainly I've learned a lot. So thank you very much. Really, very much appreciated.
Thank you for having us.
Thank you very
Wonderful.
much.
Thanks a lot.
Bye.
Take
Bye.
care.